Lessons deep, no time to sleep. Market's a beast, league got the leash. Feast at the feast, his game's elite. Market structures is domain. Leads the king, they know his name. Breakout Sharpie fuels the flame. Trading charts is not a game. Pip by pip, he stacking high. Mean reversion, banks comply. Leads the reason markets run. Leads the reason markets run. Candles lit, wicks on fire, spread so tight the stakes get higher. Institutional flow, he's the supplier. Positions held till charts retire. Data feeds, news he reads. Fibonacci maps the seeds. Supply demand his mind exceeds. Trades ignite like lightning speed. Stop loss tight, take profit wide. Least precision, unmatched drive. Liquidity pools, banks coincide. Retail's blind, leads the guide. Charts unfold, the stories told. Entry bold, accounts in gold. Trade by trade, the wins are sold. Market alchemy, legends mode. Whoa, 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 whoa. Lead the reason markets run. Lead the reason markets run. Lead the reason markets run.
Lee wakes at dawn to a glowing screen. Charts and candles, the digital sheen. Open in range, his weapon so keen. He's the structured trader, a market machine. Bank moves, he mimics, he plays their game. Near reversion, glory is his claim to fame. Market structure king. Watch him do his thing. Pips and points, the profits sing. Trading like the banks, he's in control. Leaves the master filling his bankroll. Leaves the master filling his bankroll. His mind's a map of supply and demand, turning charts to gold with a steady hand. Forex flows like rivers in his plan. Bases bow to the market man. Break out at the open, the strategy's tight. Position for the swing, he wins the fight. Risk is measured, the balance precise. Leads on the rise, he rolls the dice.
Morning all. How are you all doing? Sorry I'm late this morning. I overslept. Well, I didn't oversleep, I just didn't get out of bed in time. So I've been rushing around trying to get stuff done. Morning, how are you all doing? Right, we'll start with the news. Morning, Check. Good morning. Morning, Mumo, Barry, Holly, how are you doing? So this morning, we basically will trade the ORB on the DAX, see how it's going. We have had loads of news this week, but nothing really unexpected at all this week. It all kind of came out where we were expecting. The only thing really I think that was a big shock this week was the CPI on the dollar. Real big drop on that one. So we've had some movement on the dollar, but I wouldn't say particularly massive either. So it's kind of sideways and it's Christmas trading now. Indices have been odd this week. It's been profitable, but very hit and miss. All sorts of weird movement going in, but we'll have a look at the indices in a minute. So yeah, it's a bit of a weird week this week. I was expecting a little bit potentially of flat movement. but yeah, it has not really done anything. So interest rates came out as expected for the pound and for the euro. The CPI was the big shock this week, but as I say, we didn't get a lot of movement off of it. Nice trade yesterday off of the pound on the news. CPI as well for the pound, lower than forecast, which is good, which obviously hammered home that interest rate drop. So expecting another drop from that, but everything else this week kind of roughly where we're expecting. We've had the Bank of Japan interest rate this morning. The yen weakened massively for some reason. Again, this is a little bit unusual situation with the yen, because obviously we've had the intervention here, which obviously has rallied their interest rates. So they started using interest rates for the first time in 20 years. So a big, powerful move into the yen. But normally what happens on interest rate increases is you get a spike in the currency. This is obviously a little bit of an anomaly because we've not had interest rates for 20 years on the yen. So we've now got interest rate decisions coming out, and it doesn't seem to be reacting in normal ways. So we've had the interest rates this morning released. They were increased as we were expecting them to be, but very, very negative movement on the yen. I wasn't up in time to trade this today. Bit tricky to trade it. You would have got that short off of it, but actually it would have been a nice clean break short. Yeah, so that would have been sort of 2-to-1-ish on that short there. But yeah, as you can see, it's really, really negative. Now, I left my position trading account last night. There's your opening range on the DAX. A complete whipsaw. I left my position trading shorts on yesterday on the euro yen. So I almost posted about this yesterday in the group, and I didn't. But there's my average. Yesterday, towards the close, I had an opportunity to take something around about 0.25% off the euro yen. But because of that double top and the fact that it was pushing back down again, I was expecting those interest rates to drive the yen. They haven't. They've gone completely the opposite direction. So I should have taken that off yesterday. But it means now I've got to hold 2 yen over Christmas. Unless this is going to be an A-shaped recovery. If this is an A-shaped recovery, that's absolutely fine. But I'm really confused as to why the market is dumping the yen on that positive interest rate. If you look at the news, go back, find it. So there's your interest rate decision at 0.75. Real interest rates are expected to remain at significantly low levels. Economy has recovered moderately, although some weakness is seen. Probably need a little bit more interest rate. Wage and inflation likely to continue rising together. Labour market conditions have continued to be tight. After the rate change, real interest rates remain deeply negative. Monetary environment, blah, blah, blah. So there's nothing there that says to me that they're not going to be increasing the interest rates further. You would expect them to. The rate of increase of CPI is going up. Obviously, as CPI goes up, to control CPI, you increase interest rates. So this is all massively bullish, really, sort of medium short term for the yen. So it's a little bit confusing as to why the market has just dumped it again. I'm wondering if it's literally just a move to get out of positions before Christmas. If that is the case, we'll probably find they'll come back down, or they'll grind back down over the next week. But we'll have to wait and see. Bit of an odd one, that one. Right, let's have a look at the DAX. Inside bar on the DAX, so nothing much you can do with that. Morning watch check. I've already said that already. New intro is super. It's good, isn't it? Suno. If you want to go down a rabbit hole and never come out of it, go here. For all those budding DJs and music producers that have never been able to produce music, I created it all on here. Literally with a prompt. So bye-bye music industry as well. You've gone. This actually is a really cool thing on Suno. Over here, radio, yeah. No, explore. This. Look at this, right? This is every music genre that is out there, basically. So it's everything. So you basically pick whatever you want to. I don't know, let's go for some of this stuff. I mean, Tuareg? No idea. Hyper Jungle? So you basically pick it and it will play you a Hyper Jungle radio if you like. So can't hear it. See if I can. Why have I not got PC on there? I haven't got PC capture on there, but and you can just flick through. So it doesn't matter what you're into. You can basically listen to something if you want saxophone, bossa nova. But what it means is Spotify, bye-bye, because this basically just generates AI-generated music in any genre that you like, including the vocals. So, yeah. Anyway, that's where I created it. It's interesting, isn't it? Everybody's being redundant. Morning, Chris. Morning, Marco. Right, so we'll have a look at the DAX. There's nothing happening on the DAX at all this morning. Let me just go back over here. Nope, wrong one. So, as we can see, we are inside bar on the DAX at the moment. Lots of tails to the upside, so slightly more bearish than bullish, but not particularly exciting. So, going to be one of those days today, I think. News-wise today, didn't actually cover the news today, did I? We've got the Bank of Japan press conference, obviously, which has come out, and the rate. We've had the retail sales for the pound. They were negative, forecast to be positive. So if you look at the pound, little bit of a reaction to it, but not a lot. Obviously, that was the interest rate reaction. This was the trade yesterday off of the news. Basically, the pound, basically, is a lovely trade. Both directions, but I mean, difficult to catch that. Look at that 3-bar reversal, though. A textbook 3-bar reversal, that is the absolute pinnacle of textbook 3-bar reversals. Look. Very strong push, complete exhaustion, very strong pull. That is, if you wanted, you know, all these systems and strategies that you see everywhere, they go, this is the candlestick pattern you want to trade. They pick the best possible example you could find in humanity. There it is. That is the textbook 3-bar reversal. Anyway, so another one there. But if you took that one, well done. I wasn't watching. But anyway, so yeah, so the pound basically, no real reaction off of that today. And other news this afternoon, we've got CAD retail and home sales and Michigan revision. So this isn't likely to do anything. So realistically, this is your last trading day of the year, if you can call it that. At the moment, it looks slippy as hell to me. It just looks like the market's slipping all over the place. Spreads are okay this morning, but I wouldn't look at particularly trying to trade this at the moment. We've got no real indication of who's in control. So we've got an inside bar break to the upside. Bulls are attempting to take control. Your previous session high is resistance to the upside. So likelihood is you are going to hit that. Previous day's high, which was the aftermarket, is here. So this is your upside resistance today. Probably wouldn't want to take a long into that. Other than that, downside wise, we are trading at the previous close, so there's no target there. You've got last week's high, which could potentially go for up here. But most probable thing today is we will test yesterday's session low and daily low, which are pretty much the same thing. So this indicator, by the way, I've been working on yesterday. I'm going to start using this because it's fantastic. I love it. But it's inspired by the indicator I built for somebody else. So it's basically a levels indicator. So it draws in all of the key levels you need to know about. So last week's high and low are targets, propulsion gaps, targets, previous session and daily lows are obviously targets. And then you've got your previous close and your previous session highs and lows, which are targets. And if you're trading in the US session, it will draw in the Globex levels as well, but we don't do that for DAX. So it basically, you can turn it all on and off here. So if there's stuff that you don't want to see, you just turn those levels off and obviously they vanish. But the best thing about this, and I've been working on this for a while now, is developing a statistical edge indicator for stock indices. So this is a little project I've had on the go for months probably. I was going to build a website to do this, but I decided to put it into an indicator instead. So this section on the left here, you can see it all. Probably can't read it all, but you can see it all. What this does is it gives you statistics on what happens on the symbol that you're trading over a period of time. So in this, the setup that I've got here is I'm looking at the DAX over the last 100 days. And what this is doing is it's telling me how many candles are bullish and bearish, how many are inside bars, how many are outside bars, and what the average daily range is. It also tells me that same data from a session perspective. So for stock indices, really, you are trading futures. All of this data that you see here and this data here is pre-market and post-market. So that is the actual session for the DAX. It starts at 8 in the morning and it closes at 4:30 in the afternoon. That is the futures market. You do get a pre-market on the DAX from 7 to 8, but it never ever goes anywhere. This post-market data doesn't really exist. This is broker-related data. So you'll often find you'll end up pretty much at the previous close with this pre-market, with this sort of post-market data. But it gives you the session information as well, how many bull sessions and bear sessions we've had and how many inside sessions. And the key to using statistical analysis like this is that we know that there's only 13% of days are inside bars. We know that there's only 8% of sessions which are inside sessions. That tells us that there is a 90% chance every day, as we have just done here, that we are going to test yesterday's high or yesterday's low or the session high or session low from yesterday. So it gives you a statistical edge here that you know you have a target. Yeah. Something to do with that little sort of quiz I put out in the week in the Discord group, asking people where price is going. So I gave people 4 different charts and said, where's price going? And some of the members, because they've been doing the course, knew where it's going, and it's either going up there or down there. So with a 90% probability every day, if you open inside yesterday's range, you will go to the top or the bottom of it, guaranteed. So when you see the market starting to take off in a direction, you're looking for pullback plays to test that level, and you get out there, and vice versa. There are obviously few days where it's not going to do that, but the majority of the days it will. So no, it gives you an inkling as to where you're going to be heading. Also, it reports session gap statistics. So today we are down 16 points. As a percentage of ADR, that is 7%. The average gap up and the average gap down on the DAX are 83 and 84. So it roughly gaps around about 80 points. So today's gap is tiny. So the probability of today's gap being filled is very, very, very high. And it's actually 79%. Yeah. So it gives you all of that data as well. And it gives you the statistics on how many gaps are actually being closed on a daily basis. So 63, 64% of gaps get closed. So you know that if the close of yesterday is there and you are opening here, I mean, this is a tiny gap today. It's not a great example, is it? But you know that there is a 63% chance that you are going to test the previous close. So if we opened up here, for example, you have a 90% probability of either going there or there. And you also have a 63% probability of going there. So what do you need when you're trading? An edge. What is an edge? Anything over 50%. You've got two statistical edges there given to you every day. It also does the analysis on similar days for you. So it's got a similar gap here, which is a deviation of 15%, which I can change in the inputs. And it tells me that we've had similar gaps 24 days out of the last 100. And of those gaps that we've had, which are similar, 79% of those have filled. So it gives you the statistics on getting to that previous close. And it also tells you how many times out of those 24 days we've actually hit the session high, session low, daily high, and daily low. So it gives us statistical edges here. When we are having a similar gap to the one that we've got today, there's a 79% probability that we will hit the previous session low. That's down there. That's not a bad little target, is it? You've got a lot of room there. But there's a 79% chance. It's not guaranteed. It just means it's high probability. You've also got the inside statistics for opens. So today it's saying we are opening inside. So what this means is basically we are opening inside yesterday's session high and session low. So obviously there's your open. It is inside that. Therefore, we are opening as an inside bar. When you open as an inside bar, which it's done 63 days out of the last 100, there is a 44% probability of hitting the previous session high. Previous session low is 52, etc., etc. Hitting the previous close has a 78% probability. Yep. So what it will also do is, depending on the type of day, if you open above, it will show you how many days we've opened above over the last 100, and it gives you all the statistics on which levels were hit on those. So all you're looking for is basically anything that is a decent high probability. Yeah, so there's a good chance we're going to close a gap. There's a very good chance we're going to hit the session low or the daily low when we open in a similar way. And it also then gives you the combined statistics. So when you get a similar gap and a similar open, so where we have gapped roughly the same amount and also opened inside session levels, these are the statistics on achieving the targets. And the targets are always going to be the same. It's always your previous sessions, highs and lows, days, highs and lows, closes. That's it. That's all the market does. It moves up, it moves down, and it tests levels it tested previously. That's it. It's all market does, isn't it? It's binary. We know that. So all this does is it says to me, what's the thing to do today? I should be targeting this session low. So I'm waiting for us to close below these moving averages and then start trending down. I've got a target to the downside. So as soon as I see some bearish price action today, I'm going to target this area here as initial, and then I'm going to expect to pull back because these bulls here are probably going to buy the market back up, and the sellers are going to take profit on that leg that they've put in, and I'm going to expect a second and third leg down to these levels here. That's all that does. It tells me that. So I've been fleshing this out over the last couple of days. It's pretty much where I want it to be now with data. There's a few silly things in here, like there's hitting the previous close. That statistic is the same as that statistic, so I don't really... I've got duplicate statistics in here, basically, which I don't really need. But yeah, so and obviously depending on the symbol, so if you put it on the S&P 500, for example, and change it to the right times, it will give you all the statistics for the S&P 500. Then it gives you statistics for the Dow, whatever symbol you want. Obviously, it's not going to work. I don't know if it works. It probably would work on forex. Gap statistics won't work because it doesn't gap. Forex, because it runs constantly, obviously. But open inside, obviously, you can use this as a statistic. So today we have opens inside yesterday's highs and lows. So it combines the lines. So if you've got a previous session and a previous daily, which are the same level, it combines those two together. So that is a previous session and daily high. So it's clever that it knows all that stuff. Well, I'm clever that I programmed it to make it know that stuff. But anyway, so there's your targets today on the pound CAD. So there is a 67% probability. Probably not best to go with the gap, actually, because that's pointless information, isn't it? But opening inside, there's a 46% probability that we're going to hit the session high, less that we're going to hit the session low. So that tells me that overall, the pound CAD has probably been bullish over the last 100 days. So there's more chance of hitting the high than there is the low, but there's not a massive probability there, is there? But there's a 65% probability that we will hit the previous close. Now, if we open today and start trading away up here, and then I see some bearish price action, there's a 65% probability that we test that level. So I'm waiting for some bears to come in at the moment. So it's telling me there's not really much of a decision-making process that I can make at the minute. And this isn't really designed for forex. It's designed for stock indices. But you're going to find probably all FX pairs give you crap gap statistics, because obviously they don't gap. Now that's an interesting one. Look, okay, so the Swiss yen, we've opened up here. That's not the previous close, is it? It's not going to work in this, is it? Anyway, it's not designed for that. So back to the DAX. Okay, so we've got some bearish price action coming in. So that's not a bad looking little sell. Immediate target would be downside propulsion gaps. Trading back to the open obviously is likely to happen. We're probably going to test the low of the opening range if we are going bear. We've just tested the previous daily high and session high, and we're rejecting it. So if this now starts to go bear, which is not at the moment, there's an opportunity to short this down into the propulsion gaps. And then, as the statistics say, with a similar gap and an inside day, there is a high probability that you're going to test the lows. So the trade today is to see if we can trade down to the shorts. Now, obviously today is the last day of December. High probability we're not going to get an awful lot of volume. But if we're not going to get a lot of volume, we will get a lot of slippage, which means you might actually see some very big candlesticks today because the market's going to be slipped. But that's a nice little target. So that propulsion gap fill, obviously this draws in propulsion gaps as well. So I haven't actually got many painted on here at the moment. Wow, there wasn't many yesterday, was there? They all filled immediately, but obviously it shows you the propulsion gaps as well, which are obviously targets, and we know that propulsion gaps get filled. That's what the market does. It basically trades up and down, filling propulsion gaps. So we've got targets drawn on the charts with the indicator in the form of session levels with probabilities and propulsion gaps as well. Gone. Pending order under that low, how long we got? 50 seconds left on this candle, and target that propulsion gap. That gives me 1 to 3. It's a fairly safe trade, isn't it? If that's the high of the day we've just found there. Wait for that candle to close, but that's a pretty good trade. Do you have specific video that summarizes your current updated position trading approach? It's the academy, basically. Position Trading Bootcamp. There you go. So this is the updated version of the Bootcamp. All in there. Okay, we've already dropped. So I'm just going to get in. I'm in. I love this little function. I'm so proud of this. This is the stupidest thing, but it is so cool. When you try and drop this on an order line, it jumps off of it. Look, it won't go on it. It jumps away so that you don't accidentally adjust your TP and your stop loss while you're trying to drag. It's very cool. And if you've got multiple orders on, say you've got a line there and a line there, and you try and drop it on there, it will go pop, and then it will go, oh, I've got another order there, and it will jump down. Then it will go, oh, I've got another order there, and it will jump down and end up down there. It's so cool. I spent ages programming that. More time than I should have, because it's not that important. But anyway. Super interesting. What will you do if the mechanical ORB triggers? Different strategy, isn't it? So that's ORB's a different strategy. ORB is long at the moment. As I keep saying, it's all to do with risk to reward, yeah? So I've got a 1 to 3 short on at the moment, and I've got a 1 to 2 long on ORB. So if I stop out on this trade, I'm negative 1R, and if we rally and continue up to my target, I am plus 1R on ORB. As long as you've got positive risk reward on your trades and you're trading multiple strategies. At the moment, I'm trading a short into propulsion manually. Over here, I'm trading an opening range breakout long to an upside target. I don't know where it's going. If I knew where it's going, I'd cancel one off. But I have no idea where it's going, have I? That's the whole point of trading. If you knew where it's going, you only trade in one direction. Kind of like the statistics. The statistics are useful, but they're not going to help you massively in deciding which way to go. At the moment, we are bullish. We're trading above the session and the normal 20 moving average. So we're bullish at the moment. We're trending up. So a lot of people will be going long only. Opening range breakout has gone long only, but I've seen a 3-bar reversal at yesterday's high, which is a mean reversion play on yesterday's range. Bounce play. I don't know which one's right. They might both be wrong and I'll go down 2R. But if I do, I do. That's it. Statistics. So basically, whenever you get these type of statistics, whenever anybody gives you anything statistics related, so a lot of people publish their results and give you their strike rates and things, or indicators, nothing. A strike rate is basically how many trades are winners and losers. I can have a 99% strike rate. If I use a negative 100 stop and a plus 1 pip target, I will get my trades right 99% of the time, because the likelihood of it moving up and down 2 pips when I press that button, pretty much guaranteed, isn't it? But there will be a time when I press that button and it will tick down and it will never come back, and I will lose 100, which means I've got a negative 1R edge. Pointless, isn't it? But I could say I've got a strategy with a 99% strike rate. It's not going to make me money though. But all this is doing is telling you the statistical averages. So hitting the previous session low when we've got similar gaps is 79% probability. That's all we know. Which also means that there is a 21% chance it's just going to fly today and it's going to not work, which means that ORB today is what you need to be doing. If that 21% is right today, we go up. If it's wrong, we go down. If we go down, likelihood is we're going to hit the lows. Just maths. And all your job is, as a trader, is to find statistical bias and wrap risk around the direction. So if you are a bull today, you will be looking for pullbacks like this, and you will be entering long. If you are a bear today, you're looking for reversal patterns at the moment because we're going up, and you're looking for us to close below that moving average, and then you'll start trading below that moving average when you pull back. Your job as a trader is to decide whether you're a bull or a bear. And stick with that bias until the market proves you wrong. And if the market proves you wrong, you flip. Go the other way. Or, like me, go both ways with a positive R, and you're pretty much guaranteed to win, aren't you? When will it be available? When I get it up on the marketplace, I've got to finish it off. But probably today, if I can get the docs and the screenshots done. It's done. But I've got a member stream this afternoon at 2 o'clock, so I've got limited time today, stopping out on that trade short. So ORB, got a long way to go. Upside target on the DAX today is a bit tricky because we're above yesterday's high. So we're in a breakout. So your upside targets today are, we've got a little interim support there that we retested. So we've got this level here that we're approaching at the moment. And failing that upside there is where I would probably get out if we get through this level here, but we've got to reach it. I'm not convinced we're going to get enough volume today to actually move. The most likely probability today is we just kind of do this and we stay in a range because there's not enough. There's no news left today really to move the market, and it's it's the end of the year. It's Christmas, knocking off time basically. Are you using ATR 14 rather than 10 now? No, I use ADR 10 still. This is using ADR 14, just default. I mean, you change it to whatever you like. The inputs, you got everything in the inputs you want. So you can change everything, absolutely everything. So if you want to use different ADR, it's there. So if you want to use an ADR 10, you can. Doesn't matter which you use, it'll adjust all those figures for you. So now it's using an ADR 10 and an average session range of 10 as well. So ASR and ADR, it uses the same calculation, and it will just adjust all the data. And all that data will all adjust as well. Because obviously if you are changing these, there'll be other bits and pieces which will change. It's all calculated. There's a head load of maths in there. And it also, as well, works in the tester. So if you want to run it in the tester to see statistical analysis, it will do that as well. So you can see it's got nothing there at the moment. What happened there? Oh, I've just changed some code in it. I've just crashed it, look. It does work in the tester normally. I just realised I've turned all my banners off, look. I have my banners off. Yeah, so I've basically broken it. Come on. Crash. I made some changes yesterday. I haven't retested it since I made the changes. Oh, come on, just shut. Why does it do this? It's so annoying, Windows. Makes you press buttons millions of times. Reboot. I bet that's just literally stopped me out, hasn't it? To the pip. Now it's reversing. So yeah, no follow through at the minute. So bulls tried to break to the upside. Oh, the other cool thing it does as well, when it reboots, I'll show you. There we go. Oh, brilliant. Got the wrong data up there now. I'm still in. Didn't stop me out. Wait for the data to reload. Yeah, still in. Short. So yeah, basically we didn't break. Bulls didn't manage to get back to that high. So bears that stepped in there, holding that level. So that could be potentially a higher day, but it's a little bit early to tell. We are bullish at the minute. So the other cool thing that it does is it takes screenshots for you as well. So basically what you've got here is when you run it in the strategy tester, it basically does a screen dump for you. So you can build a repository of days, basically, and just visually see what happens on a day-to-day basis. You can adjust the zoom level so you can be zoomed in if you want to. But what it does is it takes a photo, basically, of all the statistics at the end of the session, which is this red line here. So for the DAX, it's 4:30. So at 4:30, it takes a screenshot, basically, and shows you exactly what's happened in that session. So you can say... So you can go through this and use it as a learning tool to say, right, okay, well, we had a today down day. There was a gap down. and the probability of hitting the close, the previous close, was 93%, and obviously we hit it. That's not a great example because there was no gap really, but if we find a decent sized gap, there's not many gaps on the DAX whenever this wasn't very gappy at all. So I'm just trying to find a decent gap. All right, Annie. There you go. That's not too bad. 26 points. So there's an 81% probability that you will hit the previous close on that gap. As you can see, we opened up down here. We went straight to the gap fill. I'm just trying to find a decent size one. It's not a bad size, is it? It's 40. It's 40 points. It's not really. It's not massive. I'm just trying to find something that's a bigger percentage of ADR. On a little bit. There's obviously a quiet period whenever that was. 87. There you go. So that one's 31% of ADR. So that gap there. So we had your open here, and your previous close was here. Yeah. See how price pulls back to it in the aftermarket. So probability of hitting that was 39%. Yeah. Push down, push back up again. Failed. Didn't get back there because the odds were it's not going to hit that. When you get similar gaps of that sort of size, you most of the time don't hit those gap fills because it's too far for the market to go back. When you close, as this one was, when you open below the previous session low, as we did here, and we have a gap of that size, the probability of getting back up to there is 20%. So if you are on your way there, what should you be looking for? Shorts. Because you know the closer to that you get, the more probability of that happening is, because there's only a 20% chance it'll actually get there. So you've got an 80% probability the market will drop. So it's really good for just these screenshots, just for going through and eyeballing what happens every day and seeing the statistics actually play out in front of you, so you can see how many times it's right. Haven't done that yet, but it's a good little learning tool as well. There we go. So rejection at those highs. Back to the previous close. Next stop will be the low. Obviously, we'll test the open potentially, and then we'll come down and test that low. And if that breaks down, we should come back down into here and do the gap fill. And then, I can't see it today. I don't think there's going to be enough volume today, but that's where we'll be headed. If trading the S&P, you mentioned it can also show the Globex futures. Yeah. How does it derive that info? So you set the time of the open. MT4 does show futures data. Yeah, of course it does. If I load this up now with the S&P settings, or rather the US settings, yeah. So open time is 16:30, which is 2:30 in the afternoon. Close time is 22:55. Globex starts at 03 here on my chart. Okay. So if you look at my chart here, this is the open, daily open. That is 0300. So this is the Globex session. We are in Globex now. Yeah, so there's your Globex high, there's your Globex low. So when we get to 2:30 this afternoon, and obviously the market kicks off, that Globex high and low will be marked on the chart. Those will be your first interim targets in the US session. So again, the US session, that's what I need to put on there. I need to show how many times we test the Globex high and low. But if, for example, we, on the S&P today, yeah, that is your previous day's low. but that is your previous session low. So this is important. Sessions and daily highs and lows are very different, because the trading session is where 80% of the volume comes. When you haven't got volume, you get slippage and you get slipped down to there. So that is your previous daily low. But your previous session low yesterday in the New York session in futures was there. Yeah. So if we were to move down to here, for example, and that's where we open today, your first targets, upside and downside, will be Globex low and Globex high, because this is where the automated trading before the market open designated the high and the low of the session. After that breaks, your upside targets will be the session high and the session low. If those fail, you are looking for previous days and previous high. Now, the previous daily high and the previous daily low, in this case, the session high is also the daily high, but the daily low is different. So that's what you would target. And obviously it gives you those statistics, but it won't give you those statistics now because the market's not open. So when the market opens, and it's all done by setting times in the inputs. So as long as you know what time the market's open on your chart, all CFDs are this. What you're looking at now is a CFD, contract for difference. It's exactly the same as the futures market. The price is different, but the candlesticks are the same. Within, you've got the odd candlestick will give you a wick like that, and my CFD will give me a wick like that. Yeah. So you'll get the odd slight deviation. But futures market and CFD market, the CFD market is a mirror of the futures market. So every single price quote they give me here is based on futures price movement. So if you go and open up a chart of the futures market now, it'll have done exactly that. Yeah. Same thing. We're trading futures. All you're doing, we're trading DAX futures now here. This is the DAX futures. It just so happens that my broker provides a CFD instead of a futures contract, but it's the same price movement. So the DAX futures market today has done the same thing. You might find that was there, that was there, that was a tiny, tiny little body instead of a deadstone doji. Yeah, that low might be slightly higher, one tick, but it's the same price action. If you're reading price action, it's going to be the same thing. So breaking down from that double top. So there's your open rehit. So it's retesting the open. So thinking about what we're doing on a daily basis at the moment, we've opened here. We've got a wick to the upside. If we're going to put a bear candle in to go and test, that's really badly drawn because I can't actually see the data. There we go. So previous session lows, yeah. So your daily candle at the moment looks like this. If we're visualizing what's going to happen today, yeah, we're going to come and test previous session low, previous daily low. We could end up like that. So today's price action is going to do this. That gives you that candlestick pattern on the daily chart. So this is your upside wick, potentially the high of the day. We come back to retest the open. The bulls that bought the open will either rebuy the open here and will go into a trading range, or the bears that stepped in at yesterday's high will protect it, push back maybe into propulsion or into the previous close and resell that back down into here where the bulls bought it pre-market. This one I'd ignore because it's not actually in the session, but this was in yesterday's session. This was the end of yesterday's session. So the bulls stepped in here. You can see in the pre-market or the post-market data, it got rebought. But that is where I would look for us to initially hit. We could potentially hit that and ricochet about. Don't forget, there is a probability of not hitting that as well. We've also got last week's low in the way. So anybody that bought a breakout of last week's low will potentially be looking to add size in there. There's no propulsion here though. So there's not a massive amount of buyers in this area. we'd have a propulsion gap. If there was a large volume of orders that came in at that area, i.e. a lot of buying at last week's low, we'd have a lot of that. But we didn't. So there's a potential that will get shot through today. But it's all about stats. It's all about maths. Quick maths. We are in the London session right now. Yep. Do the statistics change from one MT4 broker to another? Depends on your data. They will. Everything varies, but not dramatically. Some brokers. So this, like I said, this data here. So that's your close of the DAX yesterday at 4:30. This data here is traded on an exchange. I can't remember it's Deutsch or something. I don't know. Anyway, that's the open yesterday. That's the close yesterday. So that is the official DAX futures market. There are two banks that allow aftermarket futures trading in Germany, because this is obviously the German stock index. This is the price action that was put through there. So that is your close. And again, same way, we have pre-market action for 1 hour before the bell rings, which is like the Globex session, but it never does anything. So all of this data here isn't actually market data in the futures, the DAX futures market. But some brokers will show this, like mine does. Some brokers won't show it. Yeah. So you'll have some brokers out there, they will start here and they'll include the 1 hour before and obviously the session. Other brokers will not include that or that, and they'll just show you a mirror image of the futures market. It all depends. So if you think about it, this moving average here, yeah, that is the point at the futures market open. So if the broker did not include this data, the moving average from the close yesterday was there and it opened there. So this is why the indicator has a session moving average. You can see it flatlines here and it picks up the moving average again here. So this is a session moving average. And again, you can turn this on and off. You can see how it differs from, that's your standard 20 moving average. And that is your session moving average when it comes back on. It's a different line. So they tend to sort of come into alignment roughly halfway through the session, and then you'll get them lining up because obviously they are 20 moving averages. So as soon as 20 candlesticks has gone past, you'll see the same line because it's plotting the last 20 average prices. But if you're trading the futures market and you want to disregard this, and your broker may or may not disregard it, then that data won't be available, which is why you have a daily high and a session high, because some brokers will show you the same thing for the session and the daily because it's the same thing. Others will separate it out into this pre-market area. Now, this is actually tradable, but you and I can't usually trade this. You wouldn't be able to trade this as a retail trader, but you can with certain banks. So that's why it's kind of included. The Globex session obviously is available to trade in futures. So that is definitely all brokers pretty much show Globex in the S&P 500. You won't find any brokers that don't show you the Globex session because it is a tradable session. It just doesn't move. But it's up to your broker. So if your broker does this, the moving averages will be different. If your broker does this and that there, difference between the session high and the daily high is that, the ADR will be slightly different. So you might have slightly different readings there, in which case you might have slightly different readings there. But nothing is exact. There is nothing in trading that is exact. Everything is rough and random because there is no way of predicting exacts in trading. We just don't do it. So if yours says 42% and mine says 44% and yours says 36% and mine says 34%, what does it tell you? There's more bull than bear. That's all that information gives you. There's more bull days than bear days. We know that. It's a stock index. It always goes up. But that is different. And the streak as well. So we've had 2 bull streaks on sessions. We've had 1 bull streak on daily candles. Yours might say that you've had one bull streak because your daily high was plotted in a slightly different place because your broker didn't plot this bit, or rather it didn't plot this bit, only plotted that bit, and it opened up like that and went down. Don't know. But it'll be, it's always rough. Everything's rough. Yeah, if that's 79%, 76%, or 82%, it's roughly highly likely, isn't it? That's all you're looking for. Never look at statistical analysis as being accurate. There's a hell of a lot more chance of that happening than that happening. So if I'm going to trade today, should I be targeting the session low or the session high? I'd rather target the session low because the odds are in my favor. All you're looking to do as a trader is take a binary decision, with a risk reward higher than your losses. That's all you can do. That's all trading is. It's maths. What's the probability of it going down? What's the probability of it going up? Does it look like we're going up? Does it look like we're going down? Okay, I've got an idea. What I'll do is I'll wrap risk around that idea and hope that I make more on it if it works. My idea at the moment is we're going to double top here. This is going to be the high of the day. We're going to pull back into propulsion and go short. I have risk in the market at this level. I have a stop loss there and I have a take profit there. My take profit is 265. My stop loss is 97. That's it. I have absolutely no idea where price is going. No one does. Doesn't matter who you go and watch on YouTube. They will all get it wrong. They will all get it right. Sometimes the people that make money are the ones that have a bigger amount when they're right than when they're wrong. That's it. As long as you've got a strike rate which is somewhere around about 35 to 40% and you have a positive R on your trades, you will come out up. That's all you got. And this is what this is just designed to help give you an idea. I'm trading against the trend at the moment. The trend at the moment is bullish. Look, we've got nobody in control as well. So this statistic here, the bias, we've got a bullish moving average, but we have a potential range here at the moment because there's no bull or bear bias at the moment. The bulls are not in control. The bears are not in control. They were closer to being in control here, I would say, than the bulls. But we haven't broken out of any lows. We haven't broken out of any highs. We're just sitting around doing nothing, aren't we? So we were in a range. So sell the high and buy the low until the market proves you wrong. When the market proves you wrong, you've got a bias. But until that says we are short or we are long, or the bulls are in control, the bears are in control, pick a direction. You might be right with a 50% probability. If you get 50% probability, which is a 50% strike rate, and you can get more on the winners than the losers, all you can hope for, isn't it? That's what trading is. Go and look at the calculator. 50% strike rate with 1 to 2 risk reward ratio makes you a fortune. 35% strike rate with a 1 to 2 ratio doesn't lose you money. But you go up to 2.75 risk reward ratio, suddenly you're making a fortune. You get half of those right, making a big fortune. How you get there, totally random. Every single time I press this will be totally different. Won't repeat itself. Every 100 it will repeat itself because it's doing 100 calculations. But every single time you do it, it will be wrong. So if you've got a beautiful strategy that someone's told you about and you start trading it there, you'll dump it by trade 39 because it's not making money. Whoops. Maths. But that exact same strategy, starting in a different month, will go like that. And the minute you start trading it, it's like, holy crap, I found the holy grail. But if you start trading it there and you only give it 15 trades, you'll dump it. All it is trading, it's maths. It's this and that. And random probabilities. Okay, so that propulsion gap's held. So sell a step back in on propulsion. So potential high, low, lower high, 50% retracement on the leg. So we'll be looking for a next leg down to test the low of the day. So if you want to take another short, if that is going to be correct, we should not invalidate that high. So I can take a short down into here pretty safely. Just need to get a positive R on it. Morning, Nav. Eurex exchanges DAX. Yeah. What should we be taking more notice of? The cash market high and lows of, or the futures market high? Both. They're both highs, aren't they? Adding more size, reducing risk. So now I've got a just over a 1-to-1 if we hit here, but I've got a runner of, by the time we get down to there, probably a 4R. So if this breaks short now, got roughly a 5R day. If we just test propulsion, don't forget the statistics say there's a high probability of hitting the session low. I'm not being that greedy. But like I say, I'm not convinced we're actually going to get anywhere today. Possibly quite possible in a trading range because no volume is there. But you take, this is what I mean. So the session high here is the futures market. This is a cash market. So they're both valid. But, you know, which one should you pay more attention to? The one that gets hit. If you knew that, you'd do it, wouldn't you? Yeah, so the previous daily low gets hit 71% of the time. The previous session low gets hit 79% of the time on this particular gap size. So this is what I mean. You don't be exact about it, right? The chances are roughly 3/4 of the time, on average, it hits one of those. Which one? I don't know. So if you're worried about it, put your target here and assume it's not going to hit either of them, all right? Get out before. Get out at last week's low. Get out somewhere. It doesn't matter, does it? This is giving you a directional bias. It's telling you now the bears are in control, and it's telling you there's a high probability we'll go here. Where? I don't know. I'm not going to be that greedy because I just don't think we've got the volume today to do it. But so we're rejecting, look down here. Again, buyers are buying back up this area. So if we're in a trading range, which we are, I'm probably going to get stopped out. So I've got an option now to just take that and run. And in fact, if this candle closes like it's closing at the moment, we've got 45 seconds left. Yeah, I'm getting out. Done. That's not working, is it? Yeah. If this is going bearish, high, low, high, low, high, low, I'd expect this candle to do that. It's not. Scratch. Rubbish. Futures is seen as the leading indicator. Futures is seen as the leading indicator. Futures and CFDs are exactly the same. You won't get the futures market moving before the CFDs. No broker on the planet is going to say, I'll give you an edge, right? If you see futures go up, I'll move my market a bit later so you can get in and take all my money away. Doesn't work like that. I wish it did. In your risk reward EA, can you do fixed lots? No, it's not for futures, it's for CFDs. I could probably put lots as an option. It'll probably round. So if most brokers, if you ask for a particular risk, so if you wanted to put it on if you would put it onto percentage, you'd need to check it. if you basically, the easiest way to do it is if you want to try and trade this on futures, you can't trade on futures on MT4, doesn't exist. So if you want to trade it on futures, you'd have to use the MT5 version. So if you want to trade it on futures, stick it in the back tester on a futures market, put it on 1% risk and see if your broker rounds up or down to single contracts. Some do, some don't. But it hasn't got fixed. No, it's not for futures. I don't build stuff for futures. I don't trade futures. The only people that trade futures are people that are trading prop. And as I keep saying, if you're going to try and trade prop, you are going to constantly lose your money because it's too restrictive. So the only reason you'll trade futures, and there's no reason apart from being in the US. If you're in the US, you haven't got a choice. And if you're in the US, why are you watching me? Because I don't do futures. You want to watch someone that trades futures. It's the same thing, though, at the end of the day, isn't it? But what you could do, and I've said this before, and I covered this in the MST Academy in this section here. I can't remember. I think it's in there. Yeah, it is in there. Is about using duplicium. So what you can do is you can trade using this in MT5 and get duplicium to copy your trades over at single contract rounding. There you go. There's a solution. I just don't do futures. Well, I do futures. I just don't do futures with this, obviously, because it's the wrong thing. The reason I don't like futures, I do like futures. That's just not the right thing to say. I don't like prop very much. That's all. I trade it and I dip in and out of prop. I have these phases I go through where I'll start trading prop. It's a lot of hassle to trade prop, let's face it. You've got to manage multiple accounts. It's hard work. If you've got your own capital, it's much easier just to trade with your own money than it is to trade with someone else's money on multiple accounts, because that's the only way to make money. I could put you an option for fixed lots, yeah, but you're the only person has asked for it. Again, I don't like programming for one person. I'd rather program for the masses, and the masses trade CFDs. Most of them on MT4. So you have a selection on your new academy, a section on your new academy on how to successfully trade prop, though. Yeah. Just because I don't do it doesn't mean I don't know how to do it. It's pretty obvious. It's written there. It's written there how to do it. And there's a link to duplicium. So that's the trade copier I use. Their website's lightning fast. Look. Okay. There is a website called Duplicium, which is a trade copier between futures platforms. There we go. Well done. So you can trade on all of these. There's something wrong with their website. Look, their website's shot. So yeah, so basically I use MT5 and I copy MT5 over to Tradeovate. And basically whatever contract size is taken here, I tell it to trade one contract on there, or two contracts, or three contracts, depending on the symbol. I would tell it to trade a number of contracts. So it says basically whatever that does, if that goes long 0.1 lots or it goes long 75 lots, you trade one. Yeah. So it just copies the trade execution over onto there. So whenever I see a candlestick here and I press the sell button, it will trade one contract. Morning, Harold. AKA Harold. FX wise today, I'm not going through ADRs and stuff, and there's just no point. The markets are all over the gaff at the minute. God, I don't know what that is. This is a demo, so ignore the whatever that is. The ADRs today are yen based, basically. So Swiss yen, CAD yen, Euro yen, all the yens basically. With 175 ADR, Euro yen and pound yen. So whether this is going to hold or not, I don't know. It's not stopping, is it? So I would we're looking potentially for some kind of mean reversion on this today at some point, but I don't know quite where. We've got some movement on the New Zealand dollar as well, not the yen, but New Zealand dollar US has also hit ADR. The pound New Zealand has also hit ADR. So we've had a decent movement up on those, but RSIs, there's a few hourlies, but as I say, it's just the markets now are going to do whatever they're going to do. It's kind of dead. I wouldn't be looking for proper trade entries at the minute. It's not that time of year. Everything's going to be unreliable at the minute. That open is holding at the moment. So bulls, you see by the candlesticks, aren't you? Look, it's green, red, green, red, green, red, green, red. The whole lot, pretty much, apart from this tiny little bit at the top here, which was a massive rejection, all happening with inside this 5-minute opening range. So you've had the volley of open orders coming in today, and there's just no one in control. One of those days where if you just trade it, you're likely to get stopped out constantly. The best trades to take today are swing trades. So you just want to go for those big swingy moves that are going to take an hour or so to play out. Decent risk reward on that short back into propulsion. So that's the last propulsion gap from yesterday. That's a decent short, but that's it at the minute. There's nothing much else you can really do with this today. Crap. Not going anywhere. I think I'm probably still long on that. No, I stopped out on that DAX. Just. I'll leave the short on. So that propulsion gap is there. One I just showed you. That's pretty much it. Look, so that short trade there, which is the ORB short, is very, very similar to the trade that I just looked at. Other than that, it's not worth playing with today. Can you make Duplicium reverse it? So trades taken on Ninja, takes a trade on MT4. I don't know. Go and have a look. Yeah, it is cloud-based. I have a proper account, but I'm actually finding it more difficult than my personal account because of the restrictions. Yes, exactly. That's why they're there. If you knew someone that worked in a prop account, a prop firm, and you knew how it worked, you would run a mile. Because it's all geared towards taking evaluation money and paying a less than 1% of what you take back to people that actually manage to get paid, because everybody's doing it wrong. But even if you do it right, the chances of you making more money than using your own capital. If you've got $5,000 in capital, yeah, and you can risk $100 a trade with $5,000 in capital fairly comfortably, $50 a trade, maybe, yeah, $50 to $100 a trade. You can double that $5,000 account within 2 months. Yeah, no restrictions. You can take as much drawdown as you want. You can scale into as many trades as you want. You can adjust your trades as much as you like. You can do what the hell you want, right? And you will make money because it's your money. You will think twice about taking a trade and you'll be able to double it. If you trade on prop, you won't be able to double it. And every time you lose a tiny, tiny amount of that account, they will take the account away from you and charge you another $99. And what you'll end up doing is spending $1,000 to $2,000 of evaluation, which is nearly 40% of your actual capital. Yeah, just trying to follow their rules. Proper getting you to follow rules. Trading doesn't follow rules. Look at the P&Ls we looked at here, yeah? Right? If you had a 40% strike rate and a 1.5 risk reward ratio, you wouldn't lose money. Yeah. But look at the winning and losing streaks. 5 winners, 8 losers. 6 losers, 4 winners. 4 and 8. 4 and 7. 5 and 6. 6 and 10. 10 losing trades in a row. Yeah. This is going to change constantly. They know that. So what they do is whatever that is on average, they set the limits above it. So it doesn't matter how good you are as a trader. Any trader with a 40% strike rate can make money in this market, in any market. If you've got a 40% strike rate and you're using any kind of risk reward ratio, which is above 1.5, you will not be able to not make money. But they know that this happens. So they make sure that that means you pay a reset fee or a complete new evaluation, whichever they fancy. Yeah. Go and play around with this. This is the biggest eye opener you will get. Right? I just showed you that with that and that, you can make money guaranteed, right? If you use your own capital. If you use prop capital, you will give them all your cash. You will just keep giving them money every now and again, right? So you've failed that one. That one, you're still in it. It's driving you nuts. You've been in it for days. 10 days you've been in it. You still haven't made it. Been in it for 10 days. Still haven't made it. Been in it for 10 days. Still haven't made it. Failed. Been in it for 10 days. Still haven't made it. Failed. Yeah? Back over here. We're making money. We're making money. We're making money. We're making money. Failed. Success. I don't know how many times I've pressed that button, but I've passed an evaluation. Excellent. Now I'm in a live account. Failed. Shit. Start again. Success. Now I'm in a live account. I'm still in it. I haven't got paid. I'm still in it. I haven't got paid. I'm still in it. I haven't got paid. Failed. Shit. Start again. Still in it, haven't got paid. Still in it, haven't got paid. That's prop. That's why I built that tool. Yeah, this is what happens in the real world. In the real world, we have losing streaks. And losing streaks, you run 20 of these, yeah, you will pass 7 evaluations, you will fail 2 of them, and you will be in progress on 11. So if you put those 11 back through here, you will fail and fail and fail, and eventually those 11 will turn into those. Before they get there, this is payday. Don't get to it. There are ways to do it though. So if you can do it by running multiple accounts, that is how you get paid out of prop. But you don't run the same strategy on the account, so you don't run the accounts on the same days. You make sure you diversify your portfolio, because if you're going to have this statistic, let's say, for example, you take 10 evaluations, right? You've got to have those 10 evaluations starting on different days with different strategies. When you run that, you will pass one, you will fail one, but you'll have 8 still going. Out of those 8 still going, the next time you will pass one, you will fail one, and you'll have 6 still going. Out of those 6, we've passed 2 now. Out of those 6, we've now got 4 that we've passed, and 4 are still going. So we've now got 4 accounts. Now we're still in those. We've failed 3 of them. We've got 1 left. We passed it. We've got 5 funded accounts. We started with 10. Brilliant. Now what do we do with those 5 funded accounts? We start trading them, but on different days. We run those 5 accounts. We've got paid on 1. We've lost 1. 3 are still going. We've got another one. That's 2 payouts we've had, but we've lost 1. We've got 1 account going. That one is still going. And it failed. We've got 2 payouts. So I started with 10 accounts. I've been paid twice. If I spend $1,000 on evaluations, I've probably been paid 6. 5 grand profit. But my argument is, if you've got 5 grand, use your own capital. Because if you use your own capital, you just make money. They know exactly what they're doing. They use the edge. The edge is this. This is never going to change. Doesn't matter how many times you go over here and you hit this button, right? This will make money, but this will change. And this is where their rules get you. 13 losing trades in a row. Look at that. I made a profit of $1,000, but I lost 13 trades in a row. That's a blown account. That is passed, but it took forever. And then as soon as I passed it, what happened? I blew the account. And then I passed an evaluation. I haven't been paid yet. What happened here? I've passed an evaluation. I've blown 3 accounts. No. If you use your own capital, you print money. And this is a shit trader. Crap risk-reward ratio with a crap win rate. Yeah, this is a shit trader. Imagine if you were good. But if you're good in prop, you're still going to fail. You know, this is the problem because you're going to get losing streaks. It's just maths. So we're pushing up again. Bulls trying run on high. But it's a definite trading range at the moment. So we'll be looking to short those highs. But you've got if you're looking to sell at the moment, you're looking for some bearish price action to tell you to get in. If we're going to trade down into a trading range low, which at the moment is sitting down at roughly candle 3, candle 13 here. Yeah. Your risk reward ratio is 1 to 1.5. It's 1 to 5 at the moment, but by the time you get a bearish candlestick, you're going to get 1 to 1.5. It's not worth it. I get the feeling this afternoon is going to be the same, unfortunately. It's going to be one of those days today. So this afternoon in the members stream, we're covering what are we covering? Pullback strategy. So Fred wanted to see a pullback strategy. I think it was Fred. Somebody. No, it was Michael. No, who was it? Don't know. Can't remember who it was. Oh, hang on. I can't remember who it was, but what we're going to do this afternoon is we're going to cover a position trading trend strategy, which is a pullback, basically, pullback strategy. So we are going to be using a couple of different methods. We're going to be using ADR and we're going to be using Bollinger Bands to figure out how to get into position trading trend trades. Yeah, so I'm going to cover 2 strategies basically if you want to be a trend trader and a position trader at the same time, which typically don't go together. Third entry is going to go in on this Euro Yen. But there's a way to do it basically. I will build an EA to back test it as well, but we'll cover it today manually, and then you can back test it. So you can use the risk reward tool if you wanted to back test it, but probably better to use the position trader EA because you can just take a trade using the POS EA in the strategy tester, and then it will obviously scale in for you. But yeah, we'll cover that. So obviously there's only certain instruments it will work on, but I'll go through what the best things to do. It's just not something I do. There's nothing wrong with it as a strategy. In fact, it's probably a really good strategy to have. As for diversification, obviously standard position trading is mean reversion. But if you want a trend strategy and use position trading within a trend strategy, you've diversified yourself, haven't you? So if something pushes hard, you'll be in the trend, but you'll also be waiting for the mean reversion. So you'll have trades on hedged, long and short. Then your decision is when do you get out of your longs and when do you get out your shorts. But it's we'll cover that. I can't remember who asked for it, but somebody did. Thought feeder, it's not a scam, it's just very hard. Yeah, it's not a scam. I mean, don't get it wrong, prop firms are not a scam. It's the wrong terminology to use. Prop firms know the mathematics of trading. That's it. In the same way as casinos know the mathematics of gambling. Yeah, they just create themselves an edge. Except in a casino, the edge is 51%. In prop, the edge is 97%. Yeah? It's massive, massive. Because in prop, what they do is, in a casino, you've got like let's take roulette, for example. You've got black and red. Yeah. But you've also got 0, green. Yeah. And on a European roulette table, you've got a double 0, 2 greens. Yeah. So it's a 50-50. So if you go on red, there's a 50-50 shot you'll get it right. But occasionally that will happen. That's the house edge. Yeah. So they don't care how many times it goes red and black. It can go red 16 times in a row and be black 4 times. They know by the end of the night or the end of the week or the end of the month, it'll be roughly 50-50. But what will also have happened is you'll have had a shed load of those come in where they clear the table of all the money. All of it. Yeah. Apart from the people that go on 0, which have got very, very, very small odds of winning because it doesn't happen very often. And they get paid lots of money. But they get paid a large amount of money, which is a small amount of the remainder that is left on that table. With prop firms, they take, let's take my forex funds, for example, roughly 10 million a month in evaluation fees. There is a 0.05% payout of 3 months to traders, which means that out of that 10 million, they give away less than 500,000 the vast majority of the time. Most of the time, less than 250,000 of that back to the traders. Because what have they got? They've got the requirement of you having to pass an evaluation over a period of time, which you have to pay for. You'll most of the time fail 2/3 of those, which means you're paying 3 times as much for the chance to get a funded account. For that funded account to get a payout, it needs to form new rule sets. There are usually different rule sets in there than there are in here to make it more difficult. And they require you to hit a target. Most of the time, when you get to that target, which is usually the same as what was on your evaluation, they will give you a maximum of 50% of that profit, which then goes down and draw down on your account. So you are then starting the next phase after first payout with 50% of the room available. And they also know there's a high probability of a losing run of trades coming, which will take you out of a normal account and evaluation, let alone a funded account when you've taken 50% of the profit out. Yeah, the maths does not work for traders. Simple mathematics and rule sets. And the rule sets are, how do people make money trading? Like this. Okay, let's block those and still allow people wiggle room so they have a bit of success. But let's make sure that the long-term edge, the red and the black, isn't available to them. That's it. That's how it works. It's not a scam. It's just very, very, very heavily stacked against you. For me to make money in prop with one account, I have to have a winning streak, which hits my target, followed by a winning streak, which hits my target, which allows me to make back the money I lost losing evaluations, followed by a winning streak that allows me to take a proper payment that I can actually use to pay my mortgage. In effect, it's asking me to complete 3 evaluations, doubling my account in a row. Yeah. So when they give you a 100K account and they say, I need you to make 8K, what they're saying is, here's 8K. What I need you to do is double it. So they're asking you to double an account 3 times in the row. So let's flip this on its head. I'm going to give you 5 grand in capital today. What I want you to do is come back within 3 months with 15K in capital. Yeah. The average trader makes 10 to 15% a month. I want you to make 300. Then I'll pay you. I'll give you it all. Do you know how many of those people will actually get paid? Because it's virtually impossible. In fact, that isn't impossible. But if I said to you, here's 5K, you could only spend 500 of it a day, you'd never, ever, ever, ever make it. You would eventually, and if you were lucky, let's say, for example, right, I hit the short here, and I did this today. Let's say, first of all, I did that. Secondly, the market let me do it. That's a 1 to 13 risk-reward ratio, right? Beautiful. So I'm going to make 2.5 grand on a risk of $100. Can't see it up there. $192. It's got 1.3% on. So I'm going to make 2.5 grand on $192. Some people will do that, and then they'll get really lucky and they'll buy that back up to the highs. And what you'll do is you'll get one of those days where it just goes like that. Yeah. Pass evaluation, funded account, payout. How many people do you think are going to be lucky enough to get that trade on? Those are the ones that get paid. Flip a coin. I don't want to hammer the point, but it's not a scam. It's just mathematically very, very difficult. Yeah. Think flying a space shuttle to the moon, that sort of level. I couldn't do that. But if I have 10 accounts, and this is where the edge is, and this is what we teach in the academy, if I had 10 accounts, by sheer mathematical probabilities, I am going to get them over the line. A percentage of them. That's it. I'm going to get a percentage of those passed. Just because if I flip a coin, right, and go long and short, I'm going to get some of them that are going to work. So if some of them are going to work, I just need a run of flipping a coin that works X number of times. The mathematical probabilities are, if you do it enough, you will pass. You will get the result. So it's not about taking an evaluation. It's about taking multiple evaluations on different days with different approaches. Then you are going to win. If you have one account trading mean reversion and one account trading trend, and you do that 5 times on one account and 5 times on the other account with 2 strategies, there will be a number of days in a row, yeah, which do this. Yeah. What will happen is every mean reversion, all 5 of them will blow. Every trend will pass. But because you start some on different days, let's say that one there, probably have 1, maybe 2 of them didn't. So what you probably end up with is 3 over the line and 2 still in progress. Yeah. So out of 10, you're going to get that, and you're going to have those that won't work and those that are definitely dead because of divergence and deviation in strategy. That's how you do it. But then you've got to rely on those 3 that you've got over the line. Now you've got to pick the right strategy for the next 3 days. So if you picked 2 of them to be mean reversion and 1 of them to be trend, the trend would get there and you'd probably get paid, and the mean reversion would have blown twice. So now out of those 10, you're left with 1. And what you've probably done is just got back the money that you lost in evaluations. Now you need to trade with that. That's what's likely to happen. Why? Because you took 10, you got 1 left. What's the chances of that 1 actually making it? 1 in 10. You think about the mathematics of how it all works and you study it. It's just not going to happen. There you go. There's a trade idea. I'm very tempted to take it because it's a lovely profit, isn't it? But you got to hold it as well. That's the other thing. Psychology. They know that you're shit at psychology. Everybody is, aren't they? So if I press the short button now, right, with a $200 loss, yeah, and I go and make a cup of coffee and walk the dog, and I get back down to here, my trade, when I come back to my screen, will be sitting in $540 of profit. What am I going to do? I'm going to take that $540. So what have I just done? Reduced my 1 to 23 down to a 1 to 3. That's highly probable to get hit, isn't it? That's the low of the day today. So if we're going to put in a bear day today, what are we going to do? Put in a wick to the upside and a candle to the downside. If we're going to do that, that flip there, the open, is where that line is, where the body starts to the downside. Yeah. Highly probable we're going to at least test that, isn't it? Good idea. Good little short. It's 1 to 3, 1 to 4. Wait for some bears to come in. There is a US trader I watch in the afternoon, multi-millionaire, but it's from affiliate money. The prop firms are paying him millions. Yeah. And then he says, use my code, and thousands do. Yeah. There's loads of them. Nobody on YouTube that is pushing crap like that is making money trading, are they? They're pushing crap like that. There's YouTubers out there. There's, that guy, I can't remember his name. He trades the pound yen all the time. He owns a brokerage. He got thousands of people following me on YouTube. But what does he do? Sells his course and gets you to sign up to his brokerage. Do you think he sells you profitable strategies in his course for his brokerage, or negative strategies in his course for his brokerage? Yeah? Do you think he's taking the other side of your trades, or farming you out on an ECN account? So what does he do? He sits there and he shows you a trade where he makes $20,000 on pound yen when he gets a lucky hit. And everyone goes, oh, sign up to my brokerage, I'll show you how to do it. This is the trouble, isn't it, YouTube? It's, you can just full of bollocks. He says, YouTubing. But the reason I've got 30 people in here is because I tell you exactly what it's like. I'm not expecting you to make a fortune. I'm not expecting you to buy a load of shit. Do what you like. I don't care. Forex Guild, is that Welland by any chance? Wayland? I never heard of him. Is this the last non-member stream of the year? Yeah. So back in January. We are back January the 4th. No, 5th. 5th. So January the 5th is the first trading day back from the Christmas break. There's no point in trading New Year's Day. Yeah. No point in trading on the 2nd. There won't be any volume. No one's in work. There will be nobody there. You will have news. You will have movement here. There will still be commercial transactions happening. There won't be any speculative transactions happening, and speculative transactions move the market. So obviously that's pretty much it. So we're here, obviously. Next week, everybody's off. The banks are already off. You can see by the DAX, the banks are already off. So, Christmas Day, Christmas Eve, that's no good. There's absolutely no point in doing anything there. That week in between New Year is pointless. Yeah. So that's dead day. You've got 2 days. So it's literally these 4 days here. They're just not tradable. There's no point. You'll get killed if you try and trade on short time frames. And if you try and take new positions, you won't get any new positions on because there won't be any signals, because nothing's really going to move. And if you do, you're just going to sit sideways, and all you're going to do is you're going to pay swaps. There's no point. This is why I'm trying to get flat, but the yen has completely screwed me today. But not a lot I can really do about that. Nice rejection up at these highs, look. Am I still in the DAX long? No, it's shut, closed, stopped. So there's that level that I said about, which is what we're tapping into now. So this account here is this copies over onto my account. I've actually deactivated it for the minute, so this is still running. Still running the strategy, but it's not. I'm not trading. I'm not trading anymore. This is it. It's done. I traded yesterday, and it was break even. It wasn't the break even. It was a tiny profit yesterday on ORB, but that was because of gold. Gold yesterday was beautiful. I did manually intervene though yesterday, so we broke short on the 5-minute ORB yesterday, straight down into the lows, which I adjusted the target and took profit. Because I did that, I had to. The stop loss didn't trigger into break even, so I had to manually get out with a tiny loss on the second half. Then we broke long, straight to target, and then trailed out. So gold yesterday was the savior. The Nasdaq was crap. So Nasdaq broke short on the 5. I was expecting us to test this low, but we didn't even get down to the propulsion move. We just basically bought straight back up into there. Obviously, bear in mind there was news yesterday. It was CPI, wasn't it? So we had the CPI come out. So it's high volatility. Came back down. I was expecting that to be the leg down, and then it didn't. It stopped out, broke long. Obviously, by the time we'd done all of this, we were up at 120. I think it was 125 ADR yesterday, something like that. By the time we got up there, we were 480. ADR is 395. So yeah, we're about 125 ADR or 150 ADR, something yesterday. So I let it go because, yeah, I thought it might do, but it hit this propulsion gap and tested and rebounded back down. And then we ended up back at where we pushed on CPI. So it just whipsaw. So just price action wrong. The Dow yesterday was a double stop out. Short, back, long, out. So the same as the DAX, basically, NASDAQ yesterday. And the DAX was decent, and I got out early. So, talk about getting it wrong. So basically yesterday on the DAX, we had a long break, which immediately stopped out, which was nice because then the short break worked. So I took profit at basically 1.5 hour yesterday because we hit this low. Yeah. And you can see what I saw. I saw this price action come down and reject at the low. So I got out expecting it to bounce. It started to bounce and then it collapsed back down again. But when the news came out, because I think target was roughly there, trailer would have kicked in and it would have stopped out the second half of break even before you got hold of that. So some people might have caught that yesterday off of the ORB, but I don't think I would have. I think I would have stopped out on it yesterday, but it was a nice break to the downside, but I wasn't on it. Just one of those days, unfortunately. This is what I mean. It's getting to the point now where price action is just not there, is it? So it's still bullish. That's 5 bull candles in a row now. So you see this here, these 3 arrows. So that is, and on this dashboard now, what it will say is bulls in control. Tick. Okay. So bulls in control. That needs to be coloured green. Don't know why it's not coloured green. But basically that means we've had a rally of 3 candles in a row where we've closed within 30% of the high. So that's a strong bull run. So we've got bullish moving average and bulls in control of the market. However, immediately after that's put in, we've got a rejection and then a failed double top. So if that starts to close back down again, in theory, what you should be looking for is longs out of here. But it's not really bullish, is it? It's bullish, but it's not bullish. So it's hard to read today. You can adjust this as well. So you can say, I want to use 3 candles, 2 candles, 4 candles. I want to close within 20% of the high, 10% of the high, 30% of the high, 50% of the high, whatever you want. So you can fine tune it. The idea is basically what you're looking for is a run. Yeah. After you get a bull run or a bear run, likelihood is we're going to pull back and continue, aren't we? So it's just when you get that and that together, likelihood is more likely that we will continue. So it's all then becomes about counting legs, 1 leg, 2 leg, 3 leg. Eventually you'll get a market structure break. So if you stick the market reversal alerts indicator on here as well, that will tell you when the structure break happens. Or you could use fractals. It's all just designed to simplify life. Where are we going? What's the probabilities of getting there? Who's in control of the market? That's all you've got with stock indices, isn't it? It's very simple. Stock index normally goes up and it normally tests previous highs and lows. So right now, you're kind of floating in the middle of no man's land. And I would be looking for just bullish movement. We're above last week's low. So your only upside target today, which is never going to get to today, is there. So massive, look at that weekly candle at the moment. Looks like that. Nice big bullish weekly candle after a bearish weekly candle. Been here since 2001-ish. You're the real deal. I'm the real deal. I know. Helped me a lot. Lucky to have come across your YouTube stuff. Yeah, good. Glad to have helped. That's what I'm here for. Not here to make a load of money out of affiliate marketing, that's for sure. I've tried that. It doesn't work. I haven't actually tried it much. But I have got affiliate links. I've got affiliate links all over the place. But not all over. That's not really true. I've got a few in the academy, for prop, but that's only just really, I recommend specific firms, basically. So Take Profit Trader. The only reason I recommend firms is if I've used them and they're good, because there's a lot of crap out there. So Take Profit Trader are the main prop firm for futures that I have used, been paid, and are as fair as you can get with rules. Although there does seem to be a new generation of prop firms coming through that seem to be loosening these rules. But it's, I think the main thing to look for in prop firms is the fairness of the rules, but also the fairness of abiding by them. So people like Apex I used to trade with, it's almost impossible to get paid by Apex, because you've got to jump through so many hoops to actually get to the point where they'll pay you an amount. But they are notorious for turning around and going, actually, we just stand out and look at it and you broke a rule. And you're like, well, what do you mean I broke a rule? And, there's all these hidden rules in the terms and conditions. One of the ones they're catching a lot of people out on at the moment is the intraday drawdown rule. Some of these prop firms have now put in place a 30% intraday drawdown. So they say you're allowed to draw down 1,500 on your account intraday, but on any single trade that's running, you can't draw down more than 30%. So you've got 1,500 in total for the day, but if one trade goes 500 or more, you're done. And it's there, but it's hidden away. So what you end up with is this list of things you've got to stick to and abide by, otherwise you die, and your focus is taken completely away from trading. It's like, can I or can't I? Can I can't I? Should I or shouldn't I? I'm not quite sure if I can do this. I'll let it run and see what happens, and you're dead. Yeah, and couple that with the fact that you can't hold over news. I got some of my biggest wins holding over news, because I had a trade that was in profit. I moved it to break even. There was no risk. Boom. Huge wins. Those 1 to 23s. Yeah. Those types of trades where you're going like that. Yeah. So you short this, it goes down like this, it bounces there, it comes down to here, right? You move your stop to break even, the news hits 1 to 23 or 1 to 11 or whatever it is. Can't do it. You can't have this. Half of luck is trading. Trading is luck, yeah? Every single trade you take has a 50-50 probability of going up or going down. What shall we remove? The lucky ones. What's wrong with luck? Yeah? You get luck in your job. You get luck in life. You get luck in trading. You get luck in casinos. No, we never have luck, because luck means we've got to pay them. Yeah? This is all the stuff they do, isn't it? So it's about finding the ones that aren't going to be like that. And there's just not many of them out there, unfortunately. Right, so there's your high of the day gone in. This is a counter trend trade, lower probability. But, I mean, that is unrealistic. That is, I reckon, a decent risk reward opportunity. It's 3R, 2.5. At some point, I think this has got to go into a range. I can't believe we're going to trend on the last day of the month. I can't believe it's going to be enough volume to trend, but you never know. worth a shot short. Right. So yeah, this is the last trade basically. 200% ADR on pound yen. This is the last session of the year on YouTube. This yen is getting destroyed. I'm going to definitely have to take additional entries on euro yen and probably on CAD yen. Really didn't want to do this before Christmas. Right, look at that. I can't even get a short on. Look, there's just literally no bearish price action. So 9 EMA or reverse alert is my trigger. It's just there has not been one signal all day to get in short. That was your only signal short there. But that was too close to my previous entry, so couldn't take that. Just too close to that. It's only 30 pips away. So I'm going to be in a horrible position going over Christmas with these, unfortunately. I should have taken profit on that yesterday. Never mind. Last thing I was expecting was everyone to dump the yen when they increase interest rates. Just doesn't make sense. But equally, you know, look at this move here. Look at where we ended up 2 days later. Yeah, so it's scale in and just get out when it gives you an opportunity. That's all you can do. Over Christmas, I'll cover this in the members stream this afternoon, but over Christmas, basically, I just check in once a day on the days that trading is obviously happening and just see if there's any profit on the table. So all that I'm doing over Christmas really is trimming. So anything that gets into a sort of a decent profit, yeah, anything that gets to sort of a 1/4 to 0.5% when I spot it, just gets closed out. And if there is an opportunity to do DD control, but I don't worry too much about doing drawdown control over Christmas because my expectation is this. So if I can get in there and get out there and put that in the bank, the likelihood is it's going to go up there and give me the opportunity to put that trade back on again and then take that trade back off again. So it's not until next year that we're actually going to start then to decide which way we're going to go. So it's just about filling this up basically and just getting that as high as I can just to cope with potentially what might go wrong next year. But it's a reset over Christmas, which is why you want to be flat. But unfortunately, that's virtually impossible. If you had the opportunity to take a fresh yen trade today, what pair would you take? Probably pound. No, not. Well, I don't know actually. If I'm going to short the yen today, I must update this. I'll be looking for Swiss or CAD. So if you want to short the yen, sorry, no, no, that's totally the opposite. Ignore everything I just said. So if I'm going to short the yen today, I would short the New Zealand dollar yen, because that is absolutely through the floor at the moment. So assuming that they're going to take profit on the yen position at some point, it means they're going to buy a load of yen. As soon as they buy that yen, you want to be trading the yen against the weakest possible currency at the moment. So at the minute, the New Zealand dollar is the weakest thing out there. So when that powers up, it's going to move further against the New Zealand dollar being weak than it will against the Canadian or the Swiss, because the Swiss is strong. So if you're trading a strong currency against a strong currency, you get no movement. If you're trading a strong currency against a weak currency, the strong currency will move a lot further because there's weakness. Yeah. So New Zealand dollar yen will be the one that's moved the least today, probably. There you go. So New Zealand dollar yen has been the least movement today out of all the yen pairs. Therefore, when the yen powers up, that is the one that's likely to move the fastest. So this one has got a lot more probability of doing an A-shaped recovery, because when this does finally power up, they do profit take, or the Japanese government step in and just pump the yen. This one is weak. So it's got less resistance, which means you get more movement. but it's moved the least distance. So, you know, you got plenty of. I mean, again, look at this hugging the 9. Look. But when it kicks off, this will be back down here very, very quick. But you know, we're assuming it's going to. I still don't understand why when interest rates go up, you sell the yen. But it's it's difficult, isn't it? Like I said at the beginning, the yen is not normal. We've had negative interest rates for two decades, and now we've got positive interest rates. We don't know what to do with it. Don't forget those interest rates are still way lower than everybody else apart from the Swiss franc. So it's still the weakest currency out there sort of in relation to interest rates. If you're going to put your money somewhere in the world, you don't put it in the yen or the Swiss at the moment because that's where you're going to get the least return. So it is still weak, even though they've increased it. It's still weak. But I think obviously the banks and institutions kind of made their move on the yen last week. But yeah, odd. I don't know. If I was going to trade it, I would probably trade that. But it's just not much point in trading it today. I don't think you'll get anywhere. Okay, it's coming down nicely now. So that rejection at the highs. So we've got first leg up, second leg up. Potentially you're going to get a third leg up here. So either that propulsion gap and moving average is going to hold, and you're going to go a flag break long, in which case I'll stop out. Or that's the high of the day, and we are going to go into rotation, in which case I would want to buy the lower bar 13 or the open, which is today's low. Or we are going to fail and put in a bear candle today. And if so, that's your wick. We're going to flip at the open. Flip at the open. There's your bear. That would be downside target. So depending how aggressive you're feeling on a day with no volume, conservative, more aggressive, shoot for the moon. Moon does get hit. CAD yen 150 ADR, still pumping. I'm not getting, a lot of people will be looking to take a trade here if they're scaling in on Euro Yen 200 ADR. There's an argument for hitting this button right now. So like this CAD Yen, because the difficulty is with position trading, you don't want that average price. My average price on this short now is here, 175 ADR. The further this moves, the further away this average is going to be from price. There's an argument for actually hitting the button right now on the CAD Yen and the Euro Yen. We are nicely extended. Likelihood is we're going to pull back from extension. But equally, this could be up at 200 ADR, in which case then I'd be in 4 positions on this. Taking 2 trades in one day is on an hourly chart is difficult, but there is an argument for shorting it right now. Same with the Euro Yen. Don't know. I'm going to let it run for the minute, but doesn't seem to be stopping, does it? 80 on ADR, RSI with the Euro. And that's the danger. I can't believe it's not going to come and retest that double there. If you can get your average up there, that gives you an exit before Christmas, potentially. 2 down days, an ADR each. It's doable. Devon Lee the Greatest? Who's that? Devon Lee the Greatest? Who's that? Took a short on CAD Yen. Yes, did. Just thinking about. Just wondering if this is a safe haven run, but it doesn't really make sense because it's all to do with the yen interest rate rather than a safe haven at the moment. Okay, so propulsion being tested and put it back into the 20. So that is yesterday's high. I'm asking you, did you? Did I what? No, I didn't take a trade, no. Not now. You can take one if you want to. If you want to take one, take one. Up to you. This has got potential to go to 200 ADR, isn't it, today? So there's an argument for taking it and then moving your average up. Equally, if I wait for a signal for shorts on this, I can add another trade on the way back down. Yeah. So that will bring the average up. We've just started a new hourly candle. So what I'll probably do is watch this hour. We've got propulsion gap here and here. Yeah. And here at the moment, but obviously this candle is going to paint whichever way it goes. But if that turns bear, there's an argument for taking one there. But the EA is going to do that for me anyway. So, you know, this is the whole point of using the EA. If that closes down on a 5-minute time frame, we're going to close below the 9 EMA and get a reversal alert, aren't we? Yeah. So if that hourly candle starts to go bear, I'm taking a new trade. But all the time this is parabolic, I'm just going to leave it. But you can add in. So if this now reverses down, pulls back, you can add more size to bring the average up if you want to. But I'm only 3 trades in. There's no point in getting worried about stuff when you've got 2 entries on. Yeah, the entries aren't great because they're far away, because it's gone 200 ADR in one direction without stopping. But I've only got 2 trades on it. So, you know, the next trade that goes on it, if it becomes an A-shaped recovery, I'll have an option to close that trade out and close out probably 75% of that trade. And then I'm just left with 1 1/4 trades on. So these at the moment are candidates for doing drawdown control early, just because they're a pain in the backside. Christmas. Can't do much with it, can you? Nice reversal there. So if you want to add to this, that rejection there, so we're going to pull back into here, potentially, and pull back with buyers. So if that is your high of the day, when you pull back in to break even on the trade, and we close below wherever this low becomes, that's an add-in spot. So you take a second trade, same target, risk somewhere around about wherever the pullback is. That stop loss up there moves down to here. So I have more risk on, probably 1.5, my normal risk, but I have potentially 5 to 6R for that 1.5 risk. So let's say price action does this and then does that. Entry on it would be below the low there. Stop loss would be there. Target down there. So that gives me a 1 to 2.2. And then this stop loss would be dragged down here. So that 192 would become virtually break even. Yeah, there's the entry. Stop loss would be moved to there. So that loss would be mitigated down to $20, something like that. Take another 192 loss. I'll be in roughly $200. So about 220 risk for approximately 750. Going to make a lot more money on the short. Again, we covered that in the member stream last week before. Right, I'll let you go now because I've been on for hours, 2 hours, in fact. I'll be back in the new year. So we're back on the whatever it was I said. 5th of January, I think it is, isn't it? So 5th of January, that's the next member stream. So the member stream will be that Monday. Oh, hang on, what day is that? 5th? Yeah, it's Monday. So I'll be back on that member stream Monday. We'll do a New York trading session on the Monday and then back to normal calendar. So just bear in mind that that one isn't being done. And obviously that one won't be being done. Neither will that one, or that one, or that one, or that one. So the next one will be the 5th. So I will cancel those out and reschedule them so you know when they are. All right, so have a good Christmas if I don't see you before. But I will be in Discord and Telegram over Christmas, obviously. And I'll be in the members stream this afternoon. So if you're members, we're going to be doing the pullback strategy this afternoon that I discussed. Assuming someone turns up, but I think everyone's in Christmas mode. All right, so have a good Christmas. Enjoy. Try not to trade too much. Learn. Download this tool. Get in the strategy tester and trade with this tool in the strategy tester. Train your brain over Christmas. Don't try and make money. It's not going to work. All right, have a good one. And if you need anything, Discord or Telegram. Otherwise, I'll see you next time.
Click, clack, charts attack, candlesticks, they spark the track. Leave move silent, market crack, profit stack, no turning back. Opening range, that's the game. Breakout hits, never the same. Algorithms play, but he rewires the frame. Banks whisper his name. Flipping forex, indices flex, numbers dance. What's coming next? Green lights flash, P&L stretch. Risk managed, he never sweats. West fact buzz and traders peep. Lessons deep, no time to sleep. Market's a beast, league got the leash. Feast at the feast, his game's elite. Market structures is domain. Leads the king, they know his name. Breakout sharp, he fuels the flame. Trading charts is not a game. Pip by pip, he stacking high. Mean reversion, banks comply. Leads the reason markets run. Leads the reason markets run. Candles lit, wicks on fire, spread so tight the stakes get higher. Institutional flow, he's the supplier. Positions held till charts retire. Data feeds, news he reads, Fibonacci maps the seeds. Supply demand his mind exceeds. Trades ignite like lightning speed. Stop loss tight, take profit wide. Least precision, unmatched drive. Liquidity pools, banks coincide. Retail's blind, leads the guide. Charts unfold, the stories told. Entry bold, accounts in gold. Trade by trade, the wins are sold. Market alchemy, legends mode. Whoa, 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 whoa. Lead the reason markets run. Lead the reason markets run. Lead the reason markets run.
Lee wakes at dawn to a glowing screen. Charts and candles, the digital sheen. Open in a range, his weapon so